Sound check 1. Good morning. Welcome to the Audit, Finance and Administration Committee meeting for Thursday, May 22nd, 2025. We do have quorum. I'll call this meeting to order. Please remember that all electronic devices are to be switched to a non-audible function during committee meetings. We have no ceremonial activities. We'll move to the approval of the agenda. Mover and seconder to approve the agenda as presented. Councillor Beattie, Councillor Taddison. Questions, amendments? Hands up. Love it. Carried. Declarations of interest. Anybody? No, perfect. Approval of the minutes of the previous meeting, May 1st, 2025. Mover and seconder to adopt the minutes. Councillor Cretch, Councillor Wang. Any discussion on the adoption? No. Show of hands? Carried. Thank you. Delegations 6.1, Mike Collins Williams, West End Home Builders Association, respecting item 8.5, FCS 25028, review of community benefits charges. Mike, welcome to the podium. I'm not going to tell you your instructions because I think you know them. So when you're done, we'll ask you some questions. Go ahead when you're ready.
I'll try to be as fast as you. Wow. Good morning, members of the committee. My name is Mike Collins Williams, and I'm the CEO of the West End Home Builders Association. I appreciate the opportunity to speak to you today regarding the proposal to repeal the Community Benefits Charges Bylaw 22158 as amended. Very happy to be here today in support of the staff recommendation being brought forward today and the speed in which staff have fulfilled council direction from last month to take a close look at the litany of taxes and fees the city has been charging new housing supply. As you've heard from me before, market conditions are completely dead in the GTHA with 533 sales in the new condo apartment market in the first quarter of 2025, which is a 62% decline year over year and 88% below the 10-year average to reach the lowest quarterly total since 1995. The high-rise market is no longer on life support, it's dead, and the body is getting cold. Well, I'm here today to say that we appreciate the proposal to eliminate the CBCs. I do want to caution that it is not going to have the market climb out of the grave. There's a lot more that needs to be done here in Hamilton, but also with our provincial and federal partners. We in the industry are certainly waiting with bated breath for action ASAP on the GST. CBCs are a tool in Ontario that unfairly and regressively tax apartment residents for their choice to live in denser housing forms. New low-rise purchasers and renters are not impacted by CBCs, which are layered on top of DCs, parkland dedication, and other fees and taxes. Projects eligible for CBC funding have little to do with growth caused by new apartments or a true community benefit. You can see from the list of projects that include things such as airport expansions, a downtown parking structure, West Harbour parking structure, and various studies such as citywide employment study. And various studies, these are examples of growth subsidizing existing taxpayers for items that are not growth related. A young person or a new Hamiltonian renting a newly built studio apartment in downtown with no car should not be funding parking structures that they will not benefit from, point blank. Mounting public charges are no longer sustainable. The proposed repealing of the CBC bylaw is a welcome change in practice and helps Hamilton move forward in fulfilling its commitment to support intensification and densification. This is a very small step, but a step nonetheless in the right direction. Hamilton is now joining Mississauga in taking necessary action to reduce the burden of fees on new housing in an attempt to spur construction amidst its total collapse. While it's not a silver bullet, other actions such as DC relief proposed by the city will make an impact on development feasibility. Thank you for your time today. I welcome any questions.
Thank you, Mike. Councillor Cretch, you're up.
Thanks very much. You know, I'm somebody who moved to Hamilton to a place that didn't have parking, so I was in that demographic at one time. I understand that and support this idea and do think a lot of the CBCs, if you look at the chart, are being spent on parking garages. And so, no, not a huge fan of that. But there are other things that CBCs have been used for in other municipalities, some in our municipality, like expansion of the Children's Museum, other kinds of things like that that have a social or community benefit. Where do you think municipalities are going to be able to come up with the revenue to take on those kinds of projects? And could this be used in a different way to have more material impacts to the community based on things that they're asking for?
When the community benefits bylaw first came out, I think there was a thought or a notion within the industry that the money would be allocated either to items that there was a tangible nexus as being growth related, that perhaps were not captured by development charges bylaws, or something that we could more or less agree on that was a community benefit. It's a little baffling, some of the items that are on the list. I mean, I mentioned the airport expansion. That has nothing whatsoever to do with growth related expenses. So the way that it's been implemented here has been particularly frustrating to the industry to see where the funds were used. And when you think about it in the broader context, somebody buying a single detached home or a townhome somewhere else, they're not paying CBCs. The only individuals that are paying towards this are typically new condo buyers, which are going to be first-time buyers. This is a starter home, or in some cases, renters. They're buying a new unit that was a rental building. So this is a regressive form of taxation where it's those individuals that are least able to afford just getting into the market paying this additional tax. But I agree with you that if the funds are going to be collected, that they should be spent towards actual community benefits.
Yeah, I'll say that one of the troubles I face as a downtown councillor is that we're getting much of the growth, or have got much of the growth in the last 10 to 15 years, but not necessarily the correlative services or infrastructure or different kinds of things. Simple things sometimes, right? Like access to garbage and waste facilities for residents, you know, making sure there's garbage cans around downtown. That's a very small thing, obviously, but there are many, many other things that are similar to that that we don't necessarily have. And community benefits charges could be applied to things like that. So if I understand you correctly, in part, you don't think there's a bit of misuse from your perspective in terms of the Hamilton context for how we use these funds. Secondly, though, I guess my question to you is, if I understand this report correctly, which I think I do, the DC background study that we do next would happen in 2034 in anticipation of the 2051 process. So that would mean not reviewing this again for many years. So 9 years, I guess. I think, again, I may have that wrong, but is that your understanding as well? That
I had thought it was 4, but I don't have the report right in front of me.
Okay.
But yeah, to further on your question, I think in the current moment, we're concerned about every dollar being added in terms of additional taxation. However, if at some point in the future this is going to be reintroduced, should it be repealed now, I think a more targeted approach in terms of what the funds are being used for. If a unit downtown is going to have additional dollars of taxation towards community benefits, then those residents living in those units should directly benefit from it. So if it's garbage cans right in front, if it's beautification effort on the boulevard right in front of the new building, that has a tangible benefit to those residents and probably actually raises the property value. So there would be a nexus or a relationship between the additional money that they're putting into the city for the community benefit versus a parking garage that they may never use, an airport expansion, or some of these studies on digital office. I mean, there's just a litany of studies here that I just have a hard time seeing having any connection whatsoever to development.
Thanks very much for answering my questions. I appreciate it.
Thank you, Councillor. I have no one else on the list. Mike, thanks for coming this morning.
Thank you very much. Thank you for your
Moved and
question.
seconded to receive delegation 6.1 and refer to consideration of item 8.5. Councillor Alex Wilson, Councillor Beattie, show of hands. Thank you. Moving on to items for consideration, 8.1, AUD 25005, Accounts Payable Special Investigation Number 2, Fraud and Waste Report Number 71958. Auditor General Charles Brown, please come to the podium to begin your presentation. A.G. Brown, whenever you're ready.
Thank you. So through you, Chair, I'm Charles Brown, Auditor General, and I'm here with Deputy Auditor General Bridget Menard. I have Ken Fraze from Delta Group, who assisted on this investigation that we're presenting, and Eric Demand from Legal Services. all here to answer your questions and to report on our findings from a special investigation that we did of a $274,000 fraud that occurred, and this was perpetrated against the city. So in this case, we did a full and complete investigation to try to discover how this fraud occurred, how it happened, who the perpetrators were, and to trace the stolen funds. This incident involved the diversion of $274,000 in fraudulent payments that were made over a 2-month period, intending to go to a vendor of the city. We wanted to gain a fulsome understanding of operational processes, though, the ones that are used in administering accounts payable within the city, and payments owed to vendors, to see how these processes might be improved to prevent future occurrences. As part of our team, we enlisted the services of Ken Frey's Delta Group, and he's here with me today to present the recommendations that we've made. And this is a firm that specializes in forensic investigations. We also have Eric Demand from Legal Services. He assisted us in using legal tools to help trace the funds and deal with that part of it. So I'll briefly go over what happened in this particular incident before we get into the actual findings and operational improvements that we recommend. This fraud happened when a fraudster, posing as a vendor to the city, asked to change the bank account used for electronic funds transfer. This organization, vendor organization, was receiving regular payments every month. The banking changes were processed, that were solicited, were processed by accounts payable in the city, and that ended up diverting funds to the fraudulent account. About a month and a half later, the bank account information was changed a second time, again diverting payment to the fraudster. Finally, after 3 months of not receiving payment, the legitimate vendor called the city claiming they hadn't been paid anything for months, and this ultimately led to the discovery of the fraud. It turns out that the vendor's own IT systems had been hacked, and someone was able to actually take control of their email, sending out and receiving and intercepting emails, unbeknownst to the vendor. So that was a major contributing factor. We reported this incident to police and to this committee as a serious matter. And we put together a team with the first priority being to trace the funds. And to do this, we used multiple court orders called Norwich orders. And this allowed us to see not only where the money went, but to identify ownership of the bank accounts used in the fraud. Our investigation found that the city and vendor fell victim to what's called business email compromise. That's how the police describe it. Someone is able to, in this case, was able to hack into the vendor's email and successfully impersonate the vendor in any email communications with the city. So this is an example of the care one must take, because I think we're all familiar with the notion that you could protect yourself by scrolling up to the top and looking at where this email really comes from. Well, in this case, if you did that, it would appear to be legitimate because it is actually coming from the domain that it purports to come from. It's just that they've been hacked. So I say that because it will continue to be a risk to the city. We have umpteen thousands upon thousands of vendors. And what I mean to say is that their risk is our risk, or can be. There were due diligence procedures that were not carried out by staff. An example being calling the vendor when they make a request like this, supposed to call the vendor using the phone number that's on file for that vendor just to confirm that this is real. And there were some red flags that were missed. For example, the first bank change that was requested, it was given on a form, and it was a Calgary bank account, and we're talking about a Hamilton-situated vendor. And also the contact number that was given on the form was an Oregon area code. So there's things that you can do to pay attention to the information that's purportedly legitimate to protect ourselves. So obviously we advocate more due diligence with respect to those types of procedures, and you'll see that in some of the recommendations. So this happened. Now it turns out there were actually 3 opportunities to catch on to the fact that there was a fraud going on. You had, of course, it was going on for 3 months. It wasn't just one-time payment. And those opportunities presented themselves first when the first banking change request was made, the opportunity to do due diligence there. There was a second opportunity with a change to another bank account, which also had similar red flags associated with it. And the reason for changing to another bank account was, I don't want to get into the nitty-gritty of it, but basically the first bank account was procured by the fraudsters by way of an innocent who was themselves scammed into assisting the fraudsters. And they actually got suspicious, which prompted them for the last payment to return the payment. So the scammers went and got another victim through identity theft and set up a different bank account and continued on with their fraud. So all of these were opportunities for the city to find out that they weren't dealing with the legitimate vendor. However, I do have to say that there was no evidence, I want to make it clear, that of any participation or collusion as far as the fraud is concerned on the part of any city employees or staff at the vendor. So unfortunately, fortunately we were able to trace all funds. However, unfortunately they were quickly dissipated and are not recoverable. The best information that we have suggests that the perpetrators were persons acting in and from the United States, using accounts that were created through unsuspecting individuals in Canada, or in the second case through a so-called synthetic identity that was used to set up the bank account. And that's created by way of using stolen identity theft. You obtain credentials and you use those credentials to set up an account unbeknownst to the innocent person. The matter was reported to police, and we've turned over all of our information and as well as our final report to them. So very briefly, I'm going to turn things over to Ken Fraze. He's just going to go over the recommendations that were made to improve processes and obviously try to prevent future occurrences. Ken?
Thank you, Mr. Brown. Through you, Chair. I just want to add, one of the questions we had is why did it take so long for the vendor to contact the city to get their money back? Mr. Brown mentioned that it was almost 3 months before the phone call happened, and it's because the vendor was emailing the city, and the fraudster had set up a rule in their email that redirected all emails to the city to the fraudster's account, and the fraudster would then respond with the reason why the payment was delayed or when it was going to come or the issues that the city was having. So there was very much a fraud on the vendor related to these delays are sort of a normal thing that happens with the city. We've got issues, etc. So although the phone call took a long time, that was one of the early suspicions. And for that, we did interview the vendor. We interviewed the vendor's IT consultant, did work around that piece of it. And the Auditor General's office is very good at coordinating the interviews, the staff, information from the city, legal department in the city, and working as a team to try to find out where the money went and is it recoverable. And also, if you want to know if employees are involved, although you can interview them, interview their supervisors, knowing where the money went is pretty important. Even if you don't recover it, did money go to any sources where it could have gone back to an employee or to the vendor or to someone else? We had worked with the Auditor General's office on a similar business email compromise situation the prior year, and we'd made 6 recommendations. So we restated the 6 recommendations, all of which are still applicable to the city. And when you look at how this kind of fraud occurs, someone has to pose as a legitimate vendor. The city receives information that has to be reviewed, and you have to know who to deal with at the vendor. And you need to know what information to ask for to confirm that you're dealing with the right person. So the first recommendations we'd made prior to this fraud are set out in part here. The first 3, we recommended that the city keep an updated profile of the vendor, and only authorized signatories and vendors are then permitted to initiate a change. We also recommended the contact information in the city's vendor records be used to communicate, because if someone files a request to change where EFTs are sent, you want to make sure the right person's approving the change in the bank account at the vendor. So you don't want to use the email information and the form information that's coming in potentially from a fraudster. You want to go back to something that's a verified, accurate vendor information. And the third piece is to confirm on the first page that accounts payable staff confirm the identity of the requester before proceeding with any vendor information change. In this case, the fraudster was receiving access to emails from the city, and so may well have known the answers to some of these questions, like the bank account information, the previous payments, that sort of thing. So you want to make sure you're actually talking to the right person. In this case, if you called the number on the EFT form, it would be someone in Oregon, definitely not someone in Hamilton. So number 4, that the EFT form be amended to include old information that a scammer wouldn't necessarily know. In this case, that step would not have been very successful. It would have been the other steps that would have been required. The 5th recommendation was that accounts payable staff familiarize themselves with what a bank information looks like. What's a transit number mean? And if you look up a transit number, you can find where the bank branch is located. Does it make sense for this vendor? Because bank account changes don't happen every day. These are periodic. Most companies don't change their bank accounts because it's an incredible disruption to your systems. So assume if there is a change, the vendor is going through some sort of takeover, change in financial situation, something, or it could well be a scammer trying to divert funds. And then the last point was training, more training on what to look for in the emails, what information how to authorize or how to phone the right person, make sure you get the right information. We then made 4 more recommendations. The first one, again, was more training. Obviously, the training hadn't been very successful in this case because there were 3 opportunities to detect something, and all 3 failed to detect clear issues in what was being requested. The second one is for all vendor bank account changes to have someone trained with adequate training, a supervisor, review before anything is actually approved or authorized. And that be documented so you know it's been done. Third was a process developed to verify appropriate vendor contacts, because you do want to make sure you're talking to the right person and confirming it with the right person. And finally, the fraud policy. Just in doing Norwich orders and in trying to recover funds and working with the city's legal and Auditor General's office, some of those protocols in who does what, when, made sense to update. And it turned out the Auditor General's office was reviewing the protocol in any event, and it just added to that piece. That's my portion of the presentation.
Thank you, Ken. Auditor General, you have anything to add, or?
That concludes our presentation.
So what we'll do now is we'll take questions on the presentation, then we'll put the report on the floor, and we'll have questions of staff, then we'll receive the presentation and the recommendations at the end. Councillor Kretsch, you're up, followed by Councillor Wang. Councillor Clark, if you'd like to speak, please put yourself on the list.
Thanks for your presentation and for the report. One thing you said stood out to me as former chair of this committee and someone who's looked at a lot of audits since term of council. This is a bit different than some of the other audits from my perspective, because we identified a few things here. One, there were certain employee mistakes that were made and opportunities that existed for us to not have this happen, which is not always the case with other audits. Sometimes these things are external factors, system-related factors, cyber-related factors, attacks on our own system, whatever it might be. But the point is, this is not quite that. You said something that you've said before, but in this case has a different vibe, if I could say, which is that our vendors are a risk for us. Not just our own systems, but their systems are a risk for us. And so in this situation, could you explain maybe how it's a risk for us? Meaning, we have hundreds of thousands of dollars we're required to pay so-and-so, right? We don't actually pay that person, we pay someone else. But the reason we don't pay them isn't entirely because of our own mistakes, it's also because their systems have been hacked by somebody else. I assume the liability is still on us, though, to ensure that we're paying the right person. And so I guess what I'm wondering, and maybe I just missed this or glossed over it in the report, and I apologize for that, is do we have to pay this out a second time? Is that what had to happen here? Or did the other person say, look, we had a loss in our system, we filed an insurance claim? Like, I'm looking to understand the matrix in this situation of where the loss and risk and liability are all falling and how exactly your statement applies.
Auditor?
Through you, Chair. So there's a lot to unpack there. I'll start with the statement I made about their risk is our risk. I don't know if you recall, but last year at one point I did present. I think I showed a video which demonstrated how easy it was, even for an amateur, to simply acquire this software off the dark web, plunk in a few numbers, and essentially take over someone's email. So you don't necessarily have to be a quote-unquote hacker type expert, understanding code. And I thought that was very revealing, because that's the situation more and more organizations are having to confront these days, that someone relatively unschooled could essentially take over email and just willy-nilly try things. You only need a few hits to get a lot of money, right? And once you've taken over one organization's email and you're successful at hiding the back and forth with certain organizations and doing this kind of thing, you have great potential to do harm. Insofar as the blame is concerned, or the blameworthiness, is vendor versus their mistakes versus the city mistakes, really that's a legal question. It depends on the circumstances. So I think that's more properly a question for, I'm not sure, a program or Mike or to answer. I know that was an issue with this particular vendor, taking into account the degree of culpability for their system being hacked. But I believe ultimately we did pay as a city the full amount, but I'll let Mike answer that question.
Through the chair, Mike Zagaric, General Manager, Finance Corporate Services. The city ultimately did make the vendor whole. You'll note in the Office Auditor General's report is there were occurrences where city staff did not follow standard operating procedures, and that was the principal reason as to why the city made the vendor whole.
Councillor?
I only have one other question and comments later I guess I could make when the report's on the floor. My question is about the responses, the management responses. Should I just ask that now? It's a brief question, or should I wait till later?
Let's get it out of the way now, and then we'll save your comments once we have the auditor take their seat.
In the management responses, I noted that all of them said the word agree. In management response number 1 or 2, I think both actually, and this is a very nitpicky type of question, so I'll try and ask it in a way that makes sense. You use the past tense when saying that staff have been trained, and then later on in the second paragraph, you use the future tense, staff will be trained. What I'm trying to understand is, in response to the recommendations, were you just doing things as you were going? Was this training staff had done before? Because the way it could be read is two different ways. One is, we're responding to this by making sure staff have been trained. The second way I could read that is, we agree, staff have already been trained. So I'm trying to understand how I'm supposed to read that.
GM?
Through the chair, great question. And let me just start with thanking the Office Auditor General and Delta Consulting with respect to their recommendations and findings and safeguarding our accounts payable processes. With respect to training, the councillor's correct on all fronts. So I do want to recognize and thank Acting Director Hesmer. When this first came to our attention in February 2024, under Shelley's leadership, staff were quickly trained with respect to standard operating procedures. In addition to that training, staff are trained annually with respect to the standard operating procedures as it relates to accounts payable. So it isn't one and done. There's annual training, as I expect. This will evolve. These practices will evolve, and the training will have to evolve with respect to what's occurring as relates to fraudulent activity and with respect to improvements we make with respect to accounts payable. Staff are also trained during orientation. When staff are hired, they're trained during their orientation with respect to accounts payable procedures. Last comment I'll make is you'll note in the recommendations and management action plans of the original 6 and subsequent 4, all 5 of the original 6 have been completed. 1 is still in progress and to be completed later this year. Of the subsequent 4, all 4 management action plans have been completed. What I wanted to add is as we transition to our interim financial management system, there'll be some additional controls available to us, and those will further safeguard our accounts payable processes. Thank you.
Councillor?
Brief follow-up, since you mentioned Director Hesmer, my question is just, could you paint a picture of the staff tree for us? So in this group of responsible staff, how many people are on the front line doing work? How many people are supervising? And then what does that little bracket of staff who are responsible in accounts payable for doing this work actually look like in terms of a number of people in different levels?
Through the chair, Shelley Hesmer, Acting Director of Financial Services. So to answer your question, there is 2 individuals that can initiate the bank changes. And then we have a 2-step approval process in place that requires 1 senior level person to approve, in addition to 1 other approval as well. So there's the initiator who then will go in and do the verifications, document everything. It gets loaded into our medium-term ERP solution. So we have an audit trail with the backup in there. And then the approvers go through and complete the review to ensure procedures have been followed and do their own verification to make sure there was no red flags or anything was changed prior to it being changed in our banking file for the vendor.
Thank you. Those are my questions.
Thank you. Councillor Wang?
Thank you. Similar, but I guess a little bit different to the Auditor General through you, Chair, is the additional recommendations where you're asking for additional training. I'd like to understand who does the training, because from what we just heard, internally we do our own training, but as you've also said, this is a fluid situation. The methods and the tactics change regularly and are sometimes very sophisticated, sometimes not. So who does that sort of like first level of training to even get us to a point where we're on top of what's happening these days?
Through the chair, we're not involved in the training, but where we're coming from is that just what you said is that, especially with AI, all of these scams are only going to get more and more sophisticated. So I think it behooves the city to have more or less a program of ongoing training, and that might be, bringing people in from outside, from banks, to explain their procedures, what to look for. It's really to me, it's really about understanding more than just the bureaucratic side of things, the duties that you're to perform. It's about understanding the potential for risk and how to spot, red flags. But it's absolutely key to make that personal contact in these situations. My understanding is that, and maybe the accountants can correct me if I'm wrong, my understanding is that this is about a half a dozen times a month. There's a banking change, something like that in the order. So it's not a large scale, but obviously it wouldn't be too much of a burden to ensure that the due diligence is always there and that you're capable of responding to unique situations. I don't think the frauds will always present themselves in exactly the same way, so that the type of training you need to do recognizes that, so that you can equip staff to understand it, at least at the outset. And if they have any doubt about it, any doubt whatsoever, to consult with their superiors. Slow down the process. Don't be in a hurry. Make sure you know that this is a legitimate change.
Okay. My second question then through you, Chair, is speaking to the verification and that confirmation with an actual person on the vendor side. Do we provide any type of documentation to let them know these are the checks and balances that we're looking for from their end? Perhaps that might help with their education on that on their part too, so then that way it helps to de-risk some of that on our end. I don't know what that looks like. I don't know how we actually do that kind of process or procedure, but is that something that you might have considered, or is that part of that?
I believe so. There's a certain amount built in, but I'll let perhaps Shelley or whoever answer
Thank you,
that.
through the chair. In response to the verification, so we do have like a standard form, which a list of questions, and the staff are required to answer let me rephrase that, multiple questions. And in there, we document those. So there are specific questions that we need to make sure they're verified. So if they're not verified, we're not approving, right? That is one of the key controls that are in place right now. And that's from the approver standpoint. They need to make sure that form is completed and they have reassurance that the process has been followed. For example, contacting the vendor, the form used to say, yes, did they call? And they put yes. Well, that's not good enough now, right? So who did you call? What number did you call? That's all documented now.
Excellent, thank you. Those are all my questions.
Thank you, Councillor. Councillor Clark?
Thank you, Chair. Can I ask, how many times have this type of fraud occurred against the city?
So through the chair, this was the second incident of 3. So there was the first incident was about $52,000 loss. This second incident was $274,000, and the third incident we presented to you last month was $552,000.
And in all cases, do we pay the vendor if the money was stolen from a vendor?
Yes, in all cases, the vendors,
So we pay out twice.
vendors are made whole, I think is your.
So the cost to the taxpayers is double that.
Well, so it's well, in the case of $552,000 loss, if you recall, we managed to freeze $417,000.
Okay.
So it was a loss technically of $135,000, which we're still pursuing. But the other losses, we had to make the vendors whole.
I have questions about our authentication process with the vendors, but I feel very uncomfortable asking the questions in public because said answers could be used by fraudulent characters. And so I'm trying to understand how we can improve the system without telling the world what you're doing.
So I don't see anyone here from legal. GM Zagarek,
Yeah.
our new,
So through the chair, I appreciate the point the councillor is making. I too would not want to disclose all of our controls to the broader community. So we are happy to either follow up with the councillor or if committee wishes to go on camera to ask questions and for staff to provide greater detail with respect to what controls we put in place as it relates to the findings, recommendations, and the management action plans.
thank you, GM Clerk, because that's something we can do at, under private and confidential. Can we move into closed if that's what the committee would like to do, to ask specific questions to this?
Yes, you can do that, Mr. Chair. Then the question would be whether you want to consider the vote on this report until after you come out of closed, or?
That's my recommendation to the committee. If the committee's okay with that, we'll work through our agenda and come back. Are we okay with that? Auditor General, is that an issue for?
Another suggestion might be to make sure that when all of the management action plans are put in place, they could come back with a confidential in-camera report on everything that's been installed by way of
I like
actions.
the alternative. I think the Auditor General is offering a good process for us. Let's have our management review the authentication processes and the training, and then come back and give us an update as to how they have improved the system. I'm simply concerned, Chair. You know, I look in the report, we've got 78 cases of fraud. It's not always this way, but we really need to improve the training. There should be no way that we're letting money out of the city to anybody unless we can absolutely verify that that is the vendor. And so I'd prefer to hear the report back, and then we can look at it and decide if there's anything other that we think we should be looking at.
All the concerns,
For this
Councillor Clark.
report. I have to say, you know, I remember the early days when we were struggling to get an Auditor General for the city of Hamilton, and Charles, you and your team have proven your worth time and time again, so thank you.
Thank you, Councillor Clark. Jim Zagarek, do you need some sort of a motion, or is that good enough direction to bring back an update on this report in camera with all your functions?
So we're in the hands of committee. If I understand, the direction is there are 10 recommendations with management action plans for staff to detail the management action plans in a private and confidential appendix, and we can do so.
Okay, thank you. I don't have anyone else on my speakers list, so Auditor General, thank you very much. I'm going to have a mover and seconder to put the report on the floor. Councillor Crutch, Councillor Wang. We're going to get an update on this. I don't think, are we asking questions? Did you want to make a comment? Whatever. Yeah, go ahead.
Yeah, I had a comment or two,
Or three.
Could be three.
maybe more than three. I used to run a small business, and so I was involved in this kind of situation a number of times when payments were going back and forth between people. We had actually a complex payment system, so I know all these kinds of things about transit numbers and institution numbers kind of innately. And I'm a little surprised that we have to have a recommendation for staff to better understand that at the accounts payable level. That was a surprise in this report to me, that there would be a recommendation that basic from our accounts payable staff that they would have to get more information about how to recognize those numbers. I was surprised by a number of the findings here, especially that we had multiple opportunities to catch this error and didn't. I'm also surprised by the number of people who are doing this work in an organization this size. We're talking about, if GM Zagarek's comments from previous meetings are correct, many millions of dollars that are going through the city on a regular basis in a churning fashion. And it would be difficult to catch these kinds of things at a human level. I actually disagree respectfully with a lot of what we talked about today in terms of a solution here. And so I want to propose something that I hope you'll consider when you bring your confidential report back. This simply is not about training. Just like when we talk about road design and driver behavior, we understand that a small portion of why we see road accidents from driver behavior is due to enforcement or signage. The actual thing that changes driver behavior is design, not training. We cannot train drivers not to cause accidents, but we can force them not to. This is exactly the same principle applies here. There are absolutely tools in the marketplace for businesses, especially at our size, to do things like multi-factor authentication before we do things. If you have a verified number on file, you can text a number to the verified number on file, and that person can read you the number over the phone. If that system is forced in order to make a change, then there's no way anyone could ever make a mistake because they would be forced, like, without having to review that information. There's no way to make a mistake because the system will not allow them to do so. So continuing to rely on individual judgment, people catching a Calgary bank account or transit number information, it's not effective as a solution here. We're going to be back here again. So my recommendation is that we really find a rigorous way to force the system, to force the individuals doing this down a path that will lead to much less risk. It's not going to be perfect, but MFA is one simple tool. There are many, many other tools to do this kind of work, and companies use them every single day that I interact with when I'm trying to do something. If we're really processing information at this pace, with millions of dollars coming in here on a regular basis, and we're having losses like this at this significant of a level more than one time, I think we have to take a much stronger approach to this and look at this, especially if we're not going to change our staffing complement in any kind of meaningful way. So I'm really disappointed this happened because I think this was very avoidable in all different kinds of ways, especially based on my understanding of what the audit controls and processes should be at our city, where we have one layer, another layer, and a third layer of control here to try and catch these things before they happen. So that's my suggestion. Of course, you're the staff, I'm not. I'm just saying that I don't actually think that training is the only solution here, and I saw a lot of recommendations around training. I really think we need to have a forced design process here to prevent this from happening in the future. Thank you.
Thank you, Councillor. Councillor Clark?
How does management conduct accountability when these things are happening in their department?
GM Zagarek?
So, through the chair, I'll start. With respect to when it was first brought to our attention is management took responsibility and put measures in place immediately to limit any further risks by reinforcing the standard operating procedures with respect to the staff. So we did not wait for the final recommendations and the development of the action plans, and that was back in February 2024. In working with the Office Auditor General, we developed our management action plans, and those were finalized, presented to council, and completed. The investigation, I believe, was just completed, if I'm incorrect, the Office Auditor General can correct me, I think just a few weeks ago. And with respect to the staff who did not follow the standard operating procedures, there were some disciplinary actions taken.
Councillor?
Can I ask, do we operate with some form of progressive action? Someone gets written up, you didn't conduct your job with the fiduciary responsibility and due diligence that we are expecting. You're being notified, this is your first step. Second step, something else happens, and if they don't change it, then there's discipline in terms of a suspension for a number of days, et cetera, et cetera. Do you have that multi-step process? And if you do, are we using it in this division?
ED Fonte, GM Zagarek, you're going to take it?
Through the chair, I'll start, and then I'll invite Executive Director Fontana. We did work with our HR colleagues with respect to performance issues. It's not just the frequency, but the materiality of the issue as well that was considered, and I'll invite Executive Director Fontana maybe to speak to the process.
Thank you, Laura Fontana, Executive Director of Human Resources. There is a progressive discipline process in place, one for the unionized employees, one for non-unionized employees, more defined in a unionized setting. Excuse me. There's a number of factors that are taken into consideration: the position, the degree to which the infraction is significant, their position in the organization. If it's a non-union employee, it's a less structured process. If it's a unionized employee, there is a very defined disciplinary process. If it's your first infraction, it may be 1 day, for example. If it's your second or third, it's progressive, up to including termination of employment. There's a number of factors that are taken into consideration, a case-by-case basis, depending on the employee, depending on their current status in the organization, their position, in their date of service, those kinds of things. But it is a very structured process, particularly in a unionized environment.
City Manager, you want to add to that?
Through you, Mr. Chair. I just want to add in terms of an overall philosophy and approach, not specific to this, but just in general. So in general, we want to investigate the root cause of a situation and identify where the failure was and what the gaps are so that we can fill those gaps. Then we want to make sure that we're identifying between a systemic failure versus an individual failure, because if it's systemic, then we have things that we need to do as an organization to fix the system itself. Where there's individual issues, we also need to set clear expectations for folks to make sure that that's abundantly clear, and then make sure we're auditing that and providing feedback on an ongoing basis. Making sure that we're promoting a culture of accountability at every layer. And then, of course, if progressive discipline is required or progressive performance management, that we're doing that in the way that the GM and executive director have advised, that we've got a strict process that we're following so that people have the opportunity to correct if there's retraining or something of that nature. So I just wanted to give you that sense that we follow a holistic process with this.
Councillor?
So without mentioning the names, were the employees disciplined?
E.D. Fontana?
Through the chair, yes, they were. 3 individuals were involved. Two were disciplined, and 1, as I understand it, has retired.
Councillor?
And do we ever consider termination with cause, given the gravity of this issue?
So through the chair, we will consider termination for cause, again, depending on the circumstances. The bar to successfully achieve termination for cause is quite high, particularly if there was no intent. That would be difficult to allege. If it is something that an individual has done deliberately and with malice intent, then the ability to terminate for cause is more achievable. But in cases where it is an innocent error, termination for cause is usually not recommended, not achievable, particularly in a unionized environment where you're subject to the arbitration process, and there's another number of considerations when you're bringing forward your arguments for termination. But it is achievable. It's just a very high bar to achieve.
I understand it's a high bar, but I guess my concern is we give our employees, here's what you need to do to change a bank account information. You have to go through the following steps to verify it. And if they don't do it, then they're not acting with due diligence. If they skip part of it, then they're not acting in a manner that is fiduciary to the city of Hamilton. So I encourage management to put in place a very clear process as to how we authenticate a change, and then if the employees are not following that process, there should be accountability. These numbers are getting really high, and I'm quite concerned.
Thank you, Councillor. I don't have anyone else on the speakers list. The report is on the floor. We've asked our questions. We'll receive it electronically.
Just while you're voting, you're not just receiving the report, or you're receiving it and approving the recommendations?
The vote is up. That carries 8-0. Thank you. 8.2 AUD 25006 fraud, waste, and whistleblower semi-annual update. Mover and seconder put the report on the floor. Councillor Clark, Councillor Alex Wilson. Any questions for staff? Seeing none, we'll go to the vote. Vote is up. That carries 8-0. Thank you. 8.3 FCS 25021, proposed write-off for provincial offenses. Mover and seconder put the report on the floor. Councillor Wang, Councillor Taddison. Any questions for staff? Councillor Wang.
Thank you. What is our process on actually receive or coming back to get some of these older provincial offenses? I do see that we are looking at 2.1 million in uncollectible fines from a default date of 2017. I just wanted to understand what is the actual process for us to do that.
Through the chair, Cindy Mercanti, Director of Customer Service, POA and Financial Integration. Thank you for the question. So POA has a pretty complex process when it comes to collections. So we have first level and second level collection agencies that will pursue the collection of these fines. We also have other tools available to us. We can put it on the tax roll if applicable. We also utilize Service Ontario. So as I've talked before during the budget process, if a fine is applicable, it will show up on Service Ontario. And if an individual is interested in or pursuing renewing their license or their plate, then they will have to pay these fines first. Also, please note that the write-off for this year includes 2 years, so 2023 and 2024. Unfortunately, due to the cyber incident, we were not able to pursue a write-off report for 2023 fines in 2024. I hope that answers your question.
Yes, second question through you, Chair, is so it seems that on average we're looking at write-offs of approximately 1.5 million-ish. So is there any way for us to, as much as you've already just outlined all of the different ways, Director, on how we do that through essentially other people, is there any way for us to do better in the collection process? Have you found efficiencies that maybe we can increase the receivership, or I'm not sure what the right word is, but essentially to try and reduce that write-off number significantly?
Director?
Through the chair. So we do also, initially when the fines come in and they go into collections, we do have a small internal collection team that work to try to secure these funds. It's also important to provide some insights on what some of these write-offs account for. The majority of them, if you're looking at cases by statute, are Liquor License Act and Trespass to Property Act. The challenge with some of these fines are they may have individuals with no fixed address, which makes it very difficult to collect. But please know that we do have a process internally in which we audit to ensure that we're doing the best and compare ourselves to see what our collection rates are. And we do hold our 2 collection agencies accountable, and we do monitor their performance through our vendor management.
Thank you. Those are my questions.
Thank you, Councillor. Councillor Clark.
Asked and answered. Thank you.
Thank you, Councillor. Councillor Crutch.
I notice a trend here, if you look at the years from 2020 to 2024, and that trend shows that the balance on the far right of that chart is increasing. And so we're not seeing it stay the same, we're seeing it going up. And so I'm trying to understand the sustainability of our approach with respect to our ability to collect these fines, but also how we project on a trend line where this is headed. Because it seems like, just based on that data, and if I recall the report previously on this, a similar trend. Is this normal for municipalities? Are we going to continue to see a trend like this? Are there any aberrant reasons why this is occurring? Are we going to see a downward trend at some point or a stabilization trend at some point?
Director?
Through the chair. So for the first part of your question, it is pretty consistent with other POAs. That's one thing that Hamilton POA does, is we do interact with our other POA associates to figure out sort of where they are with regards to their outstanding balance. And it's also important to note that the composition of what you're seeing in that table, if you could please go to page 3 of 3 in the appendix, we do a bit of a breakdown as directed by committee in 2023 of what's included in those. So just for clarity, and what might be helpful is you have about 5 million, which is pre-conviction. So these are individuals that have received a fine, but haven't yet decided are they accepting that they're at fault or if they want a court date. The next is conviction. They've actually gone through the process. They've either said, yes, I'm at fault, or they've gone through the trial process and they're in conviction, and now they have a set time to pay. The rest is in what we called aged accounts receivable or default. And I'd like to break down of what's included in that. So what's included in that are people who are on a payment plan. So the court may, as a result of a conviction, may put someone on a payment plan that spans a number of years. What's also included in that are fines that are at our third-party collection agencies. And as mentioned, we have first placement and second placement agencies. It also includes what's at Service Ontario, pending collection, and finally, the amounts that are also applied onto the tax roll. So with regards to, is there any other types of strategies that we can implement? We are in consultation with our various agencies, including Hamilton Police, to see what might be available to us to enhance our collection opportunities.
Councillor?
Thanks. Appreciate the detail in the appendix. My question really was more so about the trend line and if there was something aberrant about it. So the point I'm seeing is that we're going from sort of $68 million, like the details are helpful to an extent, but overall we're going from $68 million to up to $75 million in a four-ish year period, right? If you extrapolate from that and watch the trend over the previous periods and watch, it seems to be accelerating, right? And so I'm trying to understand why it's accelerating, why it's not stabilized, because if we have an ability to collect, and then it kind of remains neutral and we're trying to chip away at that, I'm trying to understand why the trend line is going that way, if there's anything aberrant that's causing that, and what we project this to be from a sustainability perspective. So are we going to continue to see the trend line going in this way? And are we going to end up with sort of hundreds of millions at some point in POA fines? Because that would be, according to this, eventually some point we're going to end up at quite a lot in fines if the trend goes in this direction.
Director, can you answer that?
Through the chair, I know when we are looking at what's in our aged receivables, we are trying to figure out strategies on how to mitigate. The one thing we don't have control over is the portion of those that are in either Service Ontario because they are pending the individual going in to renew their license or renew their plate in order to pay these fines first, as well as those that are on a payment plan by the court. So some of those payment plans can span a number of years, which can add to this. So remember, when you're looking at your total number, a good portion of that is your age receivables, which includes individuals that are on payment plans or are pending or have fines at Service Ontario pending payment. Those we don't have a lot of control over and trying to collect.
Thanks. Maybe I'll try and ask this question in a different way. This isn't about who's to blame or who we have control over. This is about understanding the trend. So I'm just trying to understand the trend I'm seeing. The trend is happening where we're seeing that there's an increase in arrears. In a simple way, I'll say this more simply, there seems to be an increase in arrears over time, right? And so I could understand if we had like a block of, say, oh gosh, 2016 was really bad for this reason, it's caused this issue, there's some aberration in this trend. We don't expect it's going to continue to rise at this level so that we're going to see eventually hundreds of millions of dollars in offenses in a 20-year period, but we're going to see it sort of going down over a certain period or stabilizing at some point. I'm trying to understand the trend line here.
Through the chair, Francesca Angeloni, Manager of Provincial Offences. I agree, we do see the upward trend as well, and as Director McCanty stated, this is not uncharacteristic among other POA courts across the province. I can tell you that we are all concerned. I'm also a board of director on the Municipal Court Managers Association board, and together with the Ministry of the Attorney General, I believe we have a working group for collection efforts, and we are trying to make them recognize that we need better, robust tools to collect on these fines, and therefore there is some progress there. We continue to work with them to try to look at legislation and change some of the rules that we are confined with right now and restricted, because this is very common across the board that while we can't comment on the factors contributing to the increase of these uncollectible fines, we can say that some of them are fairly aged and we need better tools, more robust tools to collect on them.
Thanks. I think what you're saying, if I understand you correctly, and I really appreciate that answer, is that this is more of a systemic issue. Other municipalities are also facing this issue, and they're also seeing an increase. And until systemically the province or whomever comes into a way to try and aggressively deal with these issues, we're going to continue to see that large lump sum of age receivables kind of dragging the entire system into a place where we see a future trend line. I guess it would be helpful at some point, if I'm not sure it's part of your work plan or not, but I'll just add this in here in terms of a thought, to get a sense of a ratio or comparison, whether through municipal benchmarking organizations or other methods, to see, okay, are we in line with other organizations in terms of a ratio between the arrears and the amounts themselves? Are we out of whack there? What's the provincial situation look like? And I'm sure you've done some of this work on the board already to kind of do this analysis, but I think it'd be helpful for us to see a comparison to other municipalities where we say, okay, actually Hamilton is doing a little bit better, or we're doing the same, or we're doing worse, whatever it might be in terms of our unique issues. That way we have a better ability to advocate, especially if we know where we lie amongst our comparators.
Through the chair, thank you. Yes, that is something that we can definitely look into for future reports. We do meet regularly on a monthly basis, and this is a continuous concern amongst other POA courts across the province. So I don't think there would be any hesitation to get that information from other courts and then provide that in a report.
Thanks so much. I'm going to put a motion on the floor to do that if it's okay, because I feel like that's the only way to make sure that we'll sort of get that information. And I think it's actually really important information for us to have. So if it's okay, I'll say it slowly, but the idea would be, I'll wait for the clerk to. At the next report, perhaps if that's a reasonable timeline, which I think is next year.
The next write-off for provincial offenses report.
Thank you. There'd be a section showing us comparators to other municipalities and also showing us, that shows the ratio between perhaps those offenses charged versus those offenses collected and then the arrears. Like I think we need that information to be able to see and get an understanding of where we match up to our comparators. So for instance, as an example, if we had $250 million in charges, we collected $200 million, we see $50 million in arrears, and in an aged fashion, showing like how do we compare to others and what does that ratio look like, so that we could maybe better understand our place amongst our peers. I don't think all that's necessary for the motion, but I was just talking to make sure that it made sense.
Director, are you okay with that direction?
We're comfortable with the motion.
Thank you. Timeline, when does the next write-off report come to committee?
It will be next year around this time.
Perfect. Clerk, whenever you're ready, if you can show everybody what you got. Councillor Clark, are you seconding the motion? Awesome. Just waiting to put it on the screen. There it is. At the next POA write-off report, there'll be a section showing comparators to other municipalities and a chart showing arrears and collections in order to enable I'll let Councillor Crutch
We maybe don't need that in order to enable part. I think we could leave that out, but it's probably okay to leave it at collections. It's probably sufficient. I think everyone understands what we're after. Yeah.
Director? Good? Okay. We have a mover, we have a seconder.
And sorry, who was the seconder? Councillor Clark?
Councillor Clark. Then we'll go to electronic vote. We will bear. We're just having some technical no, there we go. Vote is up. That carries 8-0. Moving on to the report, we do have a mover and a seconder, so we'll have a vote to receive the presentation and then approve the recommendations in the report, which is what I have here, but I don't believe that is right. And there's no recommendations. There are recommendations, just no presentation. All right. We have a mover and seconder. The vote is up. That carries 8-0. 8.4, FCS 25022, Bimbrook Conservation Area Capital Funding Plan, moved by Councillor Taddison, seconded by Councillor Beattie to put the report on the floor. Any questions? Councillor Taddison, yeah? All right, Councillor Clark, I'll come to you right after. Whenever you're ready, Councillor.
Thank you. Just preparing myself mentally. In looking at this, I was just I seeing that we're charging an interest rate of 3.02. How's that determined?
Director Weaver.
Through the chair, Kirk Weaver, Acting Director, Financial Planning, Administration and Policy. The rate's determined through our internal and external loan policy and represents the amount of essentially the foregone interest that reserve would receive.
Councillor?
Okay, I'm good with that, and I just want to say I'm fully supportive of this, as long as everybody else is.
You can lead on your own. You don't need to follow everybody else. Councillor Clark?
Yeah, you can get into trouble when you follow people. I have concerns, not about the project. And to be clear, I sit on the board as an appointed member from this council. So here's the challenge in my head. So we're giving a loan to a conservation authority where we are the member municipality with Niagara Region as a second member municipality. They levy us annually. So we're giving them $500,000, and then we're saying they have to pay it back at 3.2%, so they're paying us back with our own money. We're charging 3.2% to a member conservation authority who now has to pay back that to us. And guess what? We give them the levy next year to do exactly that. It seems kind of circular, whereas it could have been easier with just a special levy. Comments?
Who would like to take that circular and make it square? Go ahead, Director.
Through the chair, the councillor is correct in that it will be on, in any of the scenarios, it will eventually be on the levy as a special levy. If committee chose not to fund it in year, the project would be delayed to 2026. It would be part of the 2026 levy as a special levy to the benefiting municipality, which is the City of Hamilton in the case of the Binbrook Conservation Area. So there, in any of the three scenarios that are contained in the report, under the Conservation Authorities Act, the city would end up paying through the levy.
And so can I ask, are there any outstanding special levies for the Niagara Conservation Authority?
Director?
Through the chair, there is currently one outstanding levy related to the Binbrook Conservation Area from 2022 for some septic work done at that time, and it was funded in the same way as proposed in this report.
Okay. So could we not give them the $500,000 as, I guess, a grant, and we take it back from the levy? I don't understand why we're charging 3.2% to one of our conservation authorities. It's just it's a special levy.
GM Zager?
Yeah, through the chair, I understand the curiosity or confusion with respect to, and we worked on this approach in consultation with the Conservation Authority. I think the impetus to proceed in this form was in that the timing of the funding. If committee wishes to direct us to take this back and to have a conversation with the Conservation Authority with respect to a conditional grant, it would have to be in the form of a conditional grant for there not to be a levy impact. It would have to come from reserves, such as the unallocated capital reserve, but likely not to be replenished. It would be a commitment from the reserve. Ultimately, the alternative would be to replenish the reserve would create a levy pressure in 2026. So if the direction is to satisfy the MPCA's desire to make a timely resolution to this issue in year rather than deferring it to 2026 for staff to consult with the MPCA on an alternative, including a conditional grant.
Can we do that, deferring this decision to council and wait for a report back on whether or not they're comfortable going down that process?
GM?
Through the chair, it would be subject to the ability to have that conversation in 6 days' time. We can reach out to see whether or not that's an option before council. If not at council, whether it's potential to table it to the subsequent council.
I'll leave it to my colleagues around the table. I've thought of, I know we did another one, but it never made sense to me financially. We're the ones that have to pay the levy. They send us the bill, we pay the levy. And so we're just taking 3.2% that they're paying, and then we're going to pay them for paying the 3.2%. because we give them the levy money. So it's really circular. So I'll leave it to my colleagues. If they're comfortable with the way it is, fine, I'll be quiet. And I'll leave it at that.
Any other first-time speakers? I have a second. Oh, Councillor Crutch, go ahead. I didn't have you on my list, sorry.
So a couple things for me on this. Firstly, I understand being on a conservation authority myself that levies are taken from various municipalities or regional municipalities, and those are done at a certain calculable percentage. In this situation, it's not just Hamilton that contributes to the MPCA. And so the payback wouldn't be coming just from the city of Hamilton, it'd be coming from the larger conservation authority budget, which would of course be apportioned, I would assume, somehow between the other groups. I don't know a lot about the MPCA, so I'm just speaking broadly to say, wouldn't there be other funds that would come in from, or would it, because this is a Hamilton-specific project, it would come out of our levy funds? Like, I understand that detail better.
That's correct.
James
Through the
Aguirre?
chair, it's the latter, and maybe the uniqueness of the MPCA versus Hamilton Conservation Authority. In the case of Hamilton Conservation Authority, it's 98% Hamilton levy. With MPCA, why it's referred to as a special levy, it's levied against the municipality that facility falls within, and that's why it's considered a special levy.
Yeah, I was thinking of Conservation Halton, where there are many municipalities and it's a little more complicated. That's where I'm participating, but thanks for that clarity. So because of a special levy, it would only apply to the Hamilton portion. My second comment is just a comment about a trend. So when we talk about account, I think it's 108020, whatever it is, the unallocated capital reserve, how we access funds for that doesn't really seem to be obvious to me. So yesterday, for instance, there was a motion which I supported about $45,000 being used from that reserve on a project. As a councillor who has access to, frankly, a very large amount of money in an area rating reserve, the most of any councillor actually, it's a little easier, maybe flippant for me sometimes, to be able to put motions forward and allocate funding for these kinds of things. And we understand why that's the case, because in the area I'm in, there are certain situations that are going on in urban Hamilton, which is why this exists, to be able to provide support for those things that would fall outside of the city's regular block funding, to address issues that come up periodically that are urgent and so on. But for everybody else, right, that ability to access funding doesn't exist. And so then there becomes some type of internal process, which I'm not really aware of because I don't have to go through this on a regular basis, but there must be one of how to access this. I really think it'd be beneficial to have some daylighting around that, because what I see is a trend of some areas using it, some areas not using it. Like, I'm just as me observing from the outside in and not having a lot of access to it. Is there a process by which this kind of thing happens, or is it sort of just coming forward through motions ad hoc and that's how it's occurring? Or is there some kind of way that we do it? Because we kind of have these two pots of money, and I know you've said this before, these aren't piggy banks, councillors, what you said before. You know, you can't just continually go into the unallocated capital reserve or to the tax stabilization reserve every time you want to do something and just plunk money out of there. It's supposed to be done strategically. However, we are also doing it through council motions, which is frankly more reactive. So can you explain that a bit more in terms of the process and how that works?
I think this is the process, but I'll let James Aguirre confirm.
Through the chair, those reserves are leveraged from time to time as it relates to something that's unscheduled, such as the issue that's before committee. Earlier this week, it was the $1.5 million for investments in IT capital for the library. Staff, there isn't necessarily a process or guideline as to when this reserve is leveraged. It's typically for infrastructure or one-time capital or community infrastructure related. Process-wise, staff do look at alternative reserves, but there are not many alternative reserves exclusive of the area rating reserves for those ward councillors who have access to area rating reserves, or the non-tax revenue reserves, which was one of the items before committee yesterday with respect to the Bimbrick Agriculture Society. So there is no process. Unfortunately, it is one of those reserves we access for unscheduled or emergency work.
Thanks, that's what I thought. And so just a brief comment from me, and maybe this is for the city manager. I do think it's really important because I understand what you're saying is that a lot of what we do here is reactive. So what we're doing is this reserve is helping us to react to situations. It's not necessarily proactive or strategic, although I'm sure we have some strategic objectives that overlie all of this kind of work. Councillors were never provided with any of these conversations when we got elected. And I wanted to say that out loud to be completely transparent. What we're doing a lot in this job is frankly learning on the fly by observation, or by having certain conversations with staff where certain information is shared in those conversations. Those are all contextual. So I might ask you a certain kind of question and you think, hey, I know we could do this. But I might ask you a bad question or a question that's not very informed or a question that doesn't understand something. And you may not say that at all, actually. And I may sit in kind of a queue for a long time asking myself a question about what do I do about this issue? And no one ever offers up the fact that, oh, wait a minute, there's this thing called the unallocated capital reserve. Oh, wait a minute, there's a tax stabilization reserve. Oh, wait a minute, there's something else you could use. And so it depended on these individual conversations, which frankly isn't really effective. And so I think it's really, really important in the next term of council, whoever's sitting in these chairs, that we have a comprehensive understanding of exactly what is available, how we can manage these things, and who we go to talk to about them. Because sometimes we get caught in a conversation maybe in public works or in planning, or having conversations about these things, and maybe the persons aren't reaching out to people in finance, and they themselves don't even know these things exist fully, or how to utilize them. So I think that's happening more often than we realize. And this process has made me realize that's definitely the case. So I think it's really important in the next term of council that we not just do orientation from a political perspective, that we actually have a more detailed orientation that gives us some insight into how these things function and what goes on in these departments and divisions. Thank you.
Thanks, Councillor. Councillor Alex Wilson.
Thank you. Very supportive of the motion at hand. Just a quick question. As my understanding is that the HCA, there's $2 million of capital block funding. Again, maybe it's a unique situation where the member municipality, but just if the NPCA was looking at their strat plan and was identifying capital expenses, like this capital expense was flagged in the NPCA's budget, this is not a surprise to me. This was right in their budget documents for this coming year that they'd be asking for more money later. I'm just wondering, when we do have that line of sight on those asks, it seems like in Hamilton we've come up with a little bit more of a long-term strategy to fund some of those needs through some block funding. Just wondering if maybe there could be a comment from staff on if there was a long-term capital need arising from the NPCA, if something like block funding would be a tool to address that need if it existed. I'm not on the board. I don't have that kind of sight.
GM Zager?
Yeah. Through the chair, with respect to Hamilton Conservation Authority, the $2 million in block funding is historic. It frankly hasn't changed probably in a decade or greater than a decade. With respect to the balance of the conservation authorities, if the conservation authorities identify a capital requirement within the city of Hamilton, effectively we're obligated to reflect that through the budget process. So I don't know that a block is necessary. It would simply come before council as it relates to a capital requirement for the Conservation Authority. And it may vary from year to year. And so a block may not be the most efficient using that $2 million figure. It could be $1 million one year, $3 million the next year. And so again, the conservation authorities, we do not have the discretion as staff to preclude presenting that information to committee and council for your consideration. And with respect to a block, while it is an option, it may not be the most efficient option.
Councillor?
Thank you. Really appreciate that answer and supportive of the main report's recommendations. Thank you.
Thank you. I have Councillor Tattison for a second time.
Just going back, because I think Councillor Clark was trying to get a better deal for our NPCA colleagues. When we talk about the 3.02 interest rate, and that amount is determined, I'm assuming, so that we're accountable to the taxpayers. Because when we give something out, we should not just be giving out without any benefit. However, in the report, it says the benefits to the community are additional restroom amenities that are accessible, and it supports well-being of park visitors and reduces risk of health issues and so forth. When we determine that interest rate, do we take those benefits into consideration, and is there an opportunity for the NPCA to have a more advantageous interest rate given to them, say if we went at 0%?
Through the chair, firstly, in terms of the interest rate. What informs the interest rate is the policy prescribes that we must use effectively our opportunity cost. As a lender, what would that revenue have, or what would those funds have generated in terms of a return? With respect to the ability to adjust or waive that is at the discretion of committee and council, and committee and council in the past have exercised that discretion. In the past, the interest rate has been waived. It's effectively been 0%, in part reflecting either funding that we're receiving from other levels of government and partnership, community benefits. So with respect to that policy, it is at the discretion of committee and council to waive the interest.
Councillor?
Well, I'd like to give that a try, if there's anyone willing to second that on the committee.
What is your direction, Councillor?
That the interest, that I guess the loan be given, but just pay back without interest over the same amount of period.
So the $500,000 will be given at 0%? Is that what you're saying?
Yes.
Your seconder is Councillor Beattie. And just before, I just want to make sure, GM and Director, are we good with this direction? It's okay, it's in line, it's late through.
Through the chair, it is an alternative. It is an option for committee to consider.
Any questions on the motion? Councillor Maureen Wilson.
Thank you, Chair. I'm just trying to follow along. We have a policy. It's always the prerogative, I suppose, of an elected council to deviate and find exceptions. I'm always asking myself about precedent and what informs the exception. And that's what I'm struggling with in terms of reference was made, I think, to a past exceptions. We have a reserve. We have an opportunity cost now. I would just like some more information on perhaps any perceived financial risks. What would govern the exceptions? I mean, hey, I'm all for public bathrooms, as you may or may not know, but I always feel uncomfortable that I'm using my discretion on determining these. So any assistance, financially or policy or otherwise, would be of value to me. Thank you.
So GM Zagarek, have we had an exception before, and any other concerns legally we should be concerned with?
Through the chair, reflecting in the past where council have waived it, it typically would have included consideration of city access or public access to the amenities. And so whether it's some sort of a community space that's owned and operated by a not-for-profit, but includes programming that the city has access to, the item that's before committee would be in keeping. These are public amenities that the public would have access to. I see in terms of the two options is really, one option is drawing from reserves. The second option is if it were to proceed with an adjusted cost to borough of 0%, this would be levied in future years. And so what committee has is the option of reserve drawing or referring this. Effectively, we would capture this in subsequent budgets, starting in 2026. The Conservation Authority would start levying the City of Hamilton for the amount in 2026. So it's really a financing strategy consideration.
Councillor? Thank you. Councillor Crush, followed by Councillor Clark on the motion, please.
Generally speaking, we have a cost recovery model we use at the city, and this just seems like that's what we're doing here, right? Is if Councillor Clark's point is accurate, which you've said it is, we're just paying ourselves back, but by taking the money out of a place where we earn interest from that money, we're losing the ability to gain interest on that money. In order to recover those costs, we have to pay ourselves back for the loss. I don't understand what advantage we gain from having a 0% interest. It's not doing a favor to anyone except for ourselves, but we're not doing a favor to ourselves. We're literally not recovering the costs for ourselves. So I don't understand why we would ever do this.
Jim Zagarek, does that make sense?
I think it does. Through the chair, I apologize if I wasn't clear. If committee and council were to approve adjusting the cost to borrow to zero, we would not pay ourselves back the foregone 3%. We would just pay back the principal amount. And so if it's an external agency, they would be subject to the cost to borrow. But if committee waives that cost to borrow, we would not levy taxpayers for that cost to borrow. Effectively, we would draw from the reserve the principal amount, not the foregone interest.
Right, so I don't support this because I don't think it makes sense for us to not pay ourselves back for the foregone interest since we're the ones who are benefiting. I think in a situation where we have an external agency where they're the ones who are doing this and we're worried about putting an undue burden on them, that may be a good consideration. We're putting an undue burden on ourselves.
Thanks, Councillor. Councillor Clark.
I find the conversation a little bit curious, given that the GIC just provided $1 million grant to a church to rebuild sections of the church. So here the Conservation Authority is fixing up the washroom to make sure that it's available to accessible people, and we want to hit them. Very odd.
Councillor Beatty.
I'm supportive of, I'm trying to collect my thoughts, sorry. Chair, through you, we've had a lot of conversation about opportunity cost. We've had a lot of conversation about potential lost revenue. I guess I see this as if I understand and I'm following the bouncing ball correctly, the NPCA would like to do this year, but they are unable to unless they receive this, shall we call, financing opportunity. Otherwise, it goes into next year's levy and they just do it next year and they send us the bill. They're essentially asking for an advance. That's how I see it. That's how I view it. The potential lost revenue in terms of interest, 3% of $500,000 by my math is about $1,500. So if I got that correctly, $1,500? 15,000? I don't know where the decimal point is landing.
We can ask the finance
Yeah,
people
that's
to
right. We
answer
have
that.
finance people. Through the chair.
Through the
Director
chair.
Weaver.
Appendix B in the report has the repayment schedule, and over the 5 years of the loan repayment, the total interest cost over the 5 years would be $46,198.
The opportunity lost if we didn't invest this, I guess is where I'm coming from, and this is the conversation. If we provide a zero interest loan, it's not necessarily, so as you've identified, Kirk, it's that amount of money is foregone. There is, in my mind, if the money is just sitting in the account and we're talking about the loss of interest that we would earn while it sits in the reserve, do we have a calculation for that?
Through the chair, that is essentially what the 3.09% interest rate is intended to cover.
If we do nothing next year, they're just going to do it anyways. This is an opportunity for an expedited process with a peer organization that's essentially asked for some help. I don't think that it is unreasonable for us to answer the call. And by foregoing the $46,000, I think that this is a good project, and I think that it's easily supportable. But obviously, there's differing opinions around the table. I respect that, but I'd like to see this project proceed.
Thank you, Councillor. And before we get to second-time speakers, I think for me, I think everybody is good with the project. I think we want to do the project. I think where we're having a bit of, I guess, difference in opinion is whether we should charge the interest or not. I mean, from where I sit, I think staff's recommendation still gets it done. And it obviously was put in there because they believe it's the best way to go about doing the project. So for me, I support the project. I support giving them the money now so they can get the project started. And I think I'm going to stick with the recommendation that staff brought forward. Second time speakers, Councillor Crutch, followed by Councillor Maureen Wilson, and then, no, you're good. Councillor Crutch, you're up.
Yeah, I just want to say, in case there was any wild confusion about what I said earlier, the only thing I was not keen on was just the amendment to 0%. I'm with the original staff recommendation, happy with this. I take Councillor Clark's point. Yesterday, we allocated certain funds to another project and more to. And I'm very happy to support a project to make sure that there are better washroom facilities. I'm a big advocate of making sure there are better washroom facilities and public washroom facilities across our city for people who need them. That's never been the issue here for me. I just think that if we're going to defer some potential interest, that we recover that interest through the method staff have said to recover it from. Seems fine to me.
Thanks, Councillor. So we do have a motion on the floor. We'll move forward with the.
Yeah, so it's an amendment to the recommendations in the report.
Okay.
And I'm just wondering if anyone wants to see how I've written it up. Okay.
So as you can see there, we've crossed out the 3.02% for an annual payment of $109,000 as outlined in Appendix B, and we've adjusted the interest rate to 0%. And we'll go to the vote on the amendment first. Oh, sorry, Councillor Beattie, question.
Sorry, if you could put that back up. It was in section 2, there was still a reference to, and I just wanted to make sure that I had read that correctly, it was still a reference to the 3.02%. Where did it go?
Oh, sorry, that's not the right thing.
I failed to bring my glasses too, so I'm at a disadvantage here.
Yes, same.
You looking number 2, Councillor? 5 years, yeah.
So the amendment would strike out on both, I believe.
Through the chair, if I can just suggest that the striking out for an annual payment, that we not strike that out, that we amend it for an annual payment of $100,000.
Or else maybe we won't get any money. We almost lost $109,000 there. Okay, how we doing? Everybody feel okay? Can everybody see that? Anyone need to borrow anybody's glasses? We're good? Okay. Clerk, can we go to the vote on the amendment? The vote on the amendment is up. And that is defeated on a 4-4 tie. So we're going to go back to the original report. I hope we don't have speakers on the original report and we can move to a vote. So what's going to happen is we're still going to fund it. The money's going to go. They're just going to pay 3.02% interest, and the vote is up. That carries 8-0. Thank you. 8.5 FCS 25028, review of the community benefits charges. May I please have a mover and seconder put the report on the floor? Councillor Beattie, Councillor Maureen Wilson. Questions for staff? And we do have GM Robichaud in the house if, okay. Go ahead, Councillor.
Thanks. Just a couple comments from me about this. It seems like, if I understand correctly, it looks like it's a 4% tax on the total value of the land that is being contributed from certain projects to the community benefit charges reserve. But I wasn't really clear about when we'd be seeing this come back again through a DC study. So I read the report, and I think there were just some different years in there. Maybe it's just my own personal confusion, but when would this actually, if repealed, come back for a review through a DC study? Would it be in 2034, or would it be in 4 years, as the delegate may have suggested?
Director Weaver?
Through the chair, the exact timing of when the next DC background study has not been determined, as it would require finalization of master plans for the various services out to 2051. So we would be, ultimately the DC bylaw currently does expire in 2034. We do anticipate that we would be revising the DC bylaw well before 2034, but the specific date has not been yet determined.
Councillor?
That's my only problem with this situation, is that I'm happy if we want to pause the bylaw for a certain period of time because we're trying to respond to something. I can agree to a certain extent that we're not seeing these community benefit charges, from my perspective, necessarily going to projects that I think are beneficial based on where the growth is. A lot of it's going to parking and those kinds of things. It's hard to have this conversation in a kind of way, because I'd like to see the policy reformed so we can see these things going to different kinds of projects. That's a whole other kind of conversation. I understand the anxiety that's out there. I also don't think this is the solution to any problem, as the delegate said. It's like, it's a really difficult one for me because I'm not really sure where to go here in terms of, it's not really going to solve a problem. It's not really seemingly an extraordinary amount of money. That seems to be the theme in the report, actually. It's like, this isn't a lot of money, so why do we care? And then the answer is, and so why do we care? And so that's where I get stuck. And then what I'm also hearing is that we don't really know when we're going to look at this again. So many things may change between now and 2034. And then if we're reviewing this kind of leading up to 2034, and then we're getting a report in 2034 or 2033 saying, this is what we recommend with respect to the CBCs. That's our next kind of opportunity to have this conversation. Again, I'm repealing it outright doesn't seem like the right solution to me. I think pausing it and reviewing it annually or something like that would make more sense, looking at this every year and saying, should we be having this come back? Is there a case to be made? Looking at the policy even in the meantime would be I think, a reasonable method. But just outright repealing it and then with an unknown date in the future doesn't seem like the right thing to do here, because I do truly think that the community benefits charges were put in the Planning Act for a reason. I think that they could have a benefit to the community, and this could be something really important and good, especially in high growth areas like downtown. So those are my questions and why I'm struggling. Can anybody help me with this? I may also just be misunderstanding to a certain extent. So I'm okay with that.
GM Zagarek?
Through the chair, I don't believe the councillor is misunderstanding. One alternative would be last committee cycle, what was before committee was the development charge or DC bylaw review. And staff made recommendations tying some amendments to DC exemptions and discounts for a 2-year period. So aligning this with those preliminary staff recommendations could be an alternative. If that is the direction committee and council wish to take, we would just need to land on a date with respect to that 2-year period, whether it's June 30th of 2026 or December 31st. But that is one alternative, is aligning this pause with the proposed preliminary recommendations of staff as it relates to the DC bylaw.
Councillor?
Thanks. I'm not going to try and put a motion on the floor today. If I want to do something like that, I can bring it to council. But I also want to just say that every time we are doing something in this situation where we're saying we recognize that there are pressures or issues for developers or builders, right? We're recognizing that's an issue. We're trying to respond to that. On the other side of that, the question for me is always, what will the impact of this actually be? How will we actually see, for instance, housing come online as a result? And I know what somebody might say would be, well, we need to have the whole suite online before we can do that. Great, then let's wait till we have the whole suite online. Piecemealing it like this also, I think, abstracts from, I think, the project that was trying to be undertaken in earnest, which is how do we look at the suite of tools we have in front of us and make a holistic decision? If we just kind of here and there, tick, 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 I think it makes it very difficult for us to actually see that. And so I'm much more in favor of doing something like you suggested, which is, again, pausing for a couple of years, coming back with a DC review and looking at this to address the short-term action without taking an action where we don't even know what the intended timeline will be. So I mean, I'm also pretty openly on the public record about us needing to rethink how we're doing all of this. So that's fundamentally where I'm coming from, is that obviously what we're doing when it comes to development in cities like ours is not working. The market is not functioning. And so, you know, I'm not suggesting in this room we can solve that problem. I'm just saying that that fundamental problem underpins all of what's going on here. And so I don't want to throw, you know, cotton candy into the rain, you know. I'll leave it there.
Don't be throwing any cotton candy around. Councillor Maureen Wilson.
Thank you, Chair. I hate cotton candy. If I could ask just some preliminary stepping stone questions, please. On page 2, it says CBCs are permitted to be used to fund a portion of growth-related share of eligible capital projects, such as parking and airport services, cultural initiatives, eligible studies, and landfill expansions. Is that the formal definition adopted by the city, and is it defined for us provincially, or is it something that provides for local nuance? Through the chair.
Director Weaver.
Through the chair, CBCs are guided by provincial legislation, similar to but not as prescriptive as Development Charges Act. So those services, historically, the CBC regime was put in place as intended as an offset to some of the proposed services that were to be removed from eligibility for DC services like parkland, like parking and airports. So that's part of the provincial legislation that resulted in restricting the use of CBCs for those purposes that are stated in the report.
So if I just understood that with the provincial redefinition of what was allowed under DCs, it shifted over just to a different column, like the airport being an example. Did I understand that correctly?
Director?
Through that's correct. It was shifted to a different regime and a different form of calculation as previously noted. It's a 4% charge on the land value as opposed to a per unit charge calculated in the DC Act.
Okay, thank you. Could you help me understand what informs the city's decision to determine, for example, there's $24,000 here for an IT strategy. What informs us on putting that in there as opposed to, say, initiating a levy for it? Because I think there's some frustration, and I think I heard it from the delegate, that these may not be, you know, fully enjoyed community benefits per se. If you could just help me out on that. What do you use in determining what gets funded from here, other than the strict definition that you just provided?
So through the chair, in addition to it needs to be an eligible service and it needs to have been determined that there's a growth-related component of the project, and it also needs to be a project that is in our 10-year capital forecast.
Councillor?
Okay, so I'm just wondering, just to pick another example, the citywide employment survey of 400, almost $500,000. How would that be a growth-related activity? Through the chair.
Director?
Through the chair, I wouldn't be able to speak to the specific project, but in general, one of the criteria that was part of the CBC legislation was that studies that were no longer eligible under the DC regime could be included in the CBC. So with that respect, it would be one of the studies that would have been previously included in our DC background studies that no longer would be included.
Okay. Thank you. I think one of my colleagues asked the delegate a question about, could you at some point see the value that in a, say, Ward 2 that's bearing the brunt, if you will, of density, but is not enjoying some of the community benefits, such as parkland, such as public washrooms, which are now having to be paid by area rating monies. I think therein lies the rub, that we're not seeing what I would consider, through my pedestrian lens, as a clear community benefit to those who are living in and around that development. And I'm wondering, does that kind of conversation enter into staff's deliberations?
Jim Zagarek?
Yeah, through the chair. If I can bring committee back to when the provincial government introduced the CBC regime and it changed the development charge, why you see the composition of projects before you, one of the principles taken with respect to staff's recommendation to committee and council as it relates to the types of projects to apply CBCs to was to reduce the levy impact because of changes to the Development Charge Act that no longer allow the municipality to recover growth-related costs for those services. If the direction from committee and council is, and I'll make some assumptions, if we were to pause this and prior to reporting back to resurrecting the CBC charge for staff to present alternative projects or methodology with respect to how the CBC can be applied, that's an option. But again, the principal reason you're seeing this composition of projects, we lost a tool with respect to growth-related projects as it relates to development charges, and frankly, we substituted the alternative tool that the province provided us. If it's the will of committee and council to revisit that, we're happy to revisit that, and that could coincide with the timing of resurrecting CBCs if the decision is to pause CBCs.
Thank you. Thank you. Yep, I'm interested in that. Just one detailed question. It's something that I've asked ever since I was elected. Every year, there's $33 to $36 million earmarked in our budget for a parking garage at the waterfront. And I think the last budget that we just had, we were advised that because we're now accommodating underground parking at the West Harbour, we may be reconsidering that. I'm not sure if I've got that right, but I'm just trying to understand the $1.9 million here attached to the West Harbour parking garage. If this is not the appropriate forum for me to ask that, I can perhaps do it somewhere else. But if someone is able to speak to what that entails and why it's been expended, if we may or may not be going forward with that parking garage, I would appreciate it. Thank you.
Jim Zagarek?
Through the chair, if we could take that offline, we'll need to do some consultation with our colleagues in planning and economic development as well.
Thank you, Councillor Wilson. Councillor Clark?
So if I understand where we are today, the provincial government made changes to the development charges that were prescriptive, that we had to follow, and that meant a number of items could no longer be attached as a development charge. A growth-related, what we would normally assume is a growth-related project, a portion of it would be on the DC. That was taken away from us. Subsequently, the provincial government created this new community benefit charges act, if it's an act, I'm not even sure if it is an act, and again, made it very prescriptive and basically took the DCs that we used to charge and put it over to community benefits. So it's still going to be charged, but it's under a different pot. Do I have that so far correct?
Who would like to take that one? Jim Zagarek?
Through the chair, I'll start, and I see Acting GM Robichaud joining the bench. Yes, with the caveat that the community benefit charges is less advantageous to municipalities in terms of the revenue potential versus a development charge. So while an alternative methodology was provided, it did not provide the same level of support that the financial support that the development charge provided.
GM Robichaud.
Thank you. Steve Robichaud, Acting General Manager, Planning and Economic Development Department. The only additional information is that the community benefit charge is in the Planning Act as opposed to being in the Development Charges Act. And there is a cap, I believe it's 4% of the value of the land, and that the total number of projects that the staff had identified that had been removed from the Development Charges Act that would be eligible for a community charge benefit exceeded the legislative authority we would have to collect for that. And following up on the earlier questioning, they repealed the old Section 37 of the Planning Act, which was the bonusing, where in exchange for an increase in height and density, the city could request certain measures be provided and negotiate that with the developer. We put in place a bonusing regime within the downtown secondary plan, which, because of the changes to the Planning Act, no longer in force and effect, and instead the province substituted it with this Section 37 community benefit charge. So it's things such as the IT strategy, for example, that is really at the planning digital permitting portal process. So we were trying to growth-related facilitate development applications by putting it into the community benefit charge rather than having that portion on the levy or offsetting some of the levy costs. And that it was because it was no longer a DC growth-related item to have a digital system to collect development applications or building permits, and instead, as a partial funding source, we utilize the community benefit charge, given that trade decisions had to be made, what was in, what was not in, because of the cap. But at the end of the day, we found ourselves, we were not able to recoup what was lost as a result of these legislative changes. Thank you.
Councillor Clark.
So my basic understanding would be that the city is no further ahead with these changes. In fact, financially, we're taking a hit.
I would not disagree with that statement.
GM Zagira.
Yeah, through the chair, agreed.
Now, if I can speak to table 2, Councillor Wilson, Maureen Wilson was asking some questions about it. So I'm assuming that everything that is in this chart is something that is permissive under the changes to the Planning Act for a community benefit charge.
Through the chair, yes, they have a growth component.
Is this appealable? Like a DC charge is appealable?
GM Robichaud.
Through you, Mr. Chairman, at the time of preparation of a community benefit charge and adoption of the bylaw, yes, anybody could appeal that bylaw, or they could appeal the imposition of the fee on their application. And it's my understanding that there would be an OLT hearing either on the merits of the bylaw or on whether or not the charge was correctly calculated as it was applied to their property. Thank you.
Okay, so a quick comment.
Go ahead.
And
I'll
be very diplomatic, which is so difficult. Here's what I fear. So this community has been longing for community benefit charges to help the community. Building parks, adding things to the Children's Museum, those types of things that are what we would essentially say is community. When I look at this, I'm not sure a comprehensive zoning bylaw helps the community. And I could go down the list on numerous of them. Citywide employment survey. The parking structures might arguably be growth related. But the broader community is expecting that we're approving community benefit charges that are there to serve the community. And really what they've done is move development charges over to this new chart. And what was argued for in our community is now gone because we have to follow this new program. I'm frustrated by that. And I think there's going to be a lot of people in the community that are going to be upset about that. I have one final question that popped into my head. The Prime Minister keeps talking about cutting development charges in municipalities. He's said it several times. Can I get an understanding, what authority does the Prime Minister have to get into municipal decision-making? I thought it was the province that made those decisions.
Anyone have an answer for that?
Through the chair, I believe the councillor's referring to the Federal Housing Infrastructure Fund, whereby if a municipality applies to that program, one of the conditions of application to that program is a freeze of development charges. So it is not that the federal government is exercising any authority, but in order for a municipality to participate and leverage funding, that is one of the conditions the federal government has identified.
So what we're experiencing now, and my colleague just showed me an article where the Conservatives are demanding that development charges be cut. It seems that senior levels of government all want to cut the development charges, but nobody wants to offset the lost revenue that we get, which pays for future infrastructure, which means property taxes have to go up. Is that correct?
Through the chair, yes, and I'll simply add, as I've stated previously, one of the most effective ways for senior levels of government to reduce development charges is to fund infrastructure projects, growth-related projects. Thereby, we would reduce the development charges to reflect that federal and provincial funding.
Well, I hope they're thinking that way, because right now all I see is a lot of political rhetoric that's crossing the floor in both directions, and municipalities are suffering under it, and the taxpayers are paying more. So without those big grants to offset the loss in DCs, I want the public to understand we're going to be in a real box in terms of how we pay for it. And that means increased property taxes and possibly cut services to offset it. So they're putting municipalities in a horrible situation without providing us that funding. Thank you.
Thank you, Councillor Clark. Councillor Crutch for a second time.
Yeah, I just wanted to be really transparent about where I stand on this. The big thing for me is that we don't have a date when it can come back. And the second big thing for me is that I agree with Councillor Clark about the items that are here don't reflect, from my perspective, the opportunity that exists in our community. The thing that Councillor Maureen Wilson lighted on, which I think is helpful as an example, is a public washroom. There's actually right now in our capital budget a line item for a public washroom. And we have that scheduled for downtown. I think the line item is between $1 and $2 million. We could easily be funding that from CBCs, it seems like, because that's very growth related, but we're not. We're funding it from somewhere else. And so for me, I think I'd rather have this linked up to the 2-year pause and review this policy and frankly review what we're spending this on. I think that some of the money in here could be allocated to other things. I think there are, for instance, 2 different parking items in here. And I think if we reviewed that, as Councillor Wilson suggests, we might find ourselves in a situation where some of that money is freed up. I also think shutting off that tap in terms of providing community benefits isn't going to help with growth-related management. And so, again, it seems like a small amount that we're talking about, and the report emphasized it several times. But I want to be clear, the impact this $17 million could have is pretty foundational if we were to apply a portion of that to growth-related issues in the downtown core where a lot of the growth is happening. I can think of many, many, many examples where this funding could really, really, really make a community benefit for people, especially around something like public washrooms, of which there are 0 public washroom facilities in our downtown core in a city of 600,000 plus people. So that ought to have been a priority for the last decade. It's not been, and we're trying to make it one now. this is a perfect funding source for that. So I'm not going to vote in favor of this today. I'm going to bring an amendment, hopefully at council, to say, hey, could we look at a different understanding here of the timeline? Because having a timeline of maybe 2034 doesn't work for me, because I think that ultimately, if we do make a policy change here, the community that will be impacted the most by that, that is going to be downtown. So I'm going to vote no today and bring something forward, hopefully, and get an amendment approved that we can support at council. Thank you.
Thank you, Councillor. I have no one else on the speakers list, so we do have a mover. Yep, Councillor Wilson.
Sorry, thank you, Chair. My apologies. When I was asking my questions, GM Zagaric said there could be an opportunity to sort of redefine or inform, if you will, that which would prioritize any future CBCs. So I just want to make sure I understood, so further to kind of Councillor Crutch's question, what is the exercise that would see that perhaps refocus, reprioritization, redefinition? Is it imminent, or could we jumpstart it on our own accord through the chair?
GM Zagaric.
Through the chair, I'll start, and then if I misstate, I'll look for staff to correct me. It is a council controlled policy and bylaw. I'm assuming it would require amendment to the policy and bylaw, and we would just need some direction with respect to some principles in terms of how to review that policy and a timeline as well.
Thank you. So I think there's two issues here. One is, yes, housing development is, it's in a free fall. Condo sales are dying, and the market seems to be flatlined. And I'm hearing some sensitivity of, well, that may not always be the case. Eventually there will be some uptick, and we don't want to unintentionally sever what could be a justifiable exercise of levy for council-defined priorities. And I think I heard the delegate say he did not, and I don't want to speak to him, but I thought I heard him say he wasn't dismissive of the value, but the rub was in A, the market is in free fall, and B, what is being charged doesn't seem to be overtly a community benefit that we could feel, see, hear, and is in line with what is needed, where perhaps the density is being taken place. So I'm hearing from you that those priorities would be defined by this body, and the timing of that would be defined by this body. And that that doesn't have to be triggered by anything other than what this body wants to do.
Yeah. Through the chair, I didn't feel a nudge from behind me, so I believe that's all correct.
Okay, thank you. Just procedurally, I can vote for the staff recommendation, knowing that perhaps there might be some work to be done in informing it, and we can have that conversation at council or the next opportune time. Yeah, thank you.
Yep. So just so everybody's aware, we are now voting on the report. Oh, hold on. Hold that thought.
Apologies, just a quick clarification where Councillor Maureen Wilson picked up. So council discretion to review the policy, to set the principles for that policy and the timeline of the policy. Sounds like from the conversation so far, at least the vocal councillors have indicated a preference in doing it sooner than 2034 when the DC bylaw is that which is staff recommending. I'm just looking for kind of final clarity. What's the implication if council wants to do this sooner than that DC back study is ready? Do we not have key information to make decisions, and so then are told, oh, well, it's great that we have these principles, but you actually need to do the review of the long-term cost to make this impact, and so we're in the 2034 again? Just trying to understand if council's recommending a different timeline than what staff is recommending, which is what it sounds like, what's the implication of that?
Thank you, Councillor. There's just conferring. And just to confirm, your question is if we change the timeline, as right now it's in the report, it's 2034, because we don't. If we change that to 2027, what are the implications, if any?
I'm sorry, through the chair, if you could repeat, apologize.
Here it comes.
So if the review occurs, new priorities are established to say community benefits are defined as X, Y, Z in this distance from the development, and we do that review and that review is conducted, say, in the next 24 months, what is the implication of not having the DC background study done at the conclusion of that review if we're going to try and move forward with a new community benefits bylaw? Like, I'm just asking about the role of the long-term review, the DC review, and this specific piece and how those two pieces talk to each other.
Through the chair, they're really two separate exercises. Okay. And so one does not inform or restrict the other.
Okay, so staff's recommendation was just to bring two things at the same time, but they don't have to come together and there's not implications from severing them. Thank you. I just wanted that to be very clear as well. Thank you.
Any staff good with that? I see. We're good. Jim Zagaric, anything to add? I see another conversation happening.
Yeah, no, just through the chair is Table 2 did anticipate a review. You'll see a 2025 CBC study. And so subject to direction is we would undertake that review subject to the timing and direction of committee and council.
Thank you, GM Zagaric. Okay, one last chance. Anyone? Going once, twice? We're good to vote? All right, let's go to the vote.
Mr. Chair, I just want to confirm that we're voting, you're voting now on the recommendations in the report unamended.
Changed.
Yes.
Yep. Vote is up. That carries 7-1. 8.5A, correspondence from Mike Collins Williams, West End Home Builders Association, respecting report FCS 25028. Mover and seconder received the correspondence. Councillor Clark, Councillor Beatty, show of hands. Thank you. 8.6, grant subcommittee minutes, GSCC 25-002, May 14, 2025. Mover and seconder to put the report on the floor. Councillor Tattison, Councillor Wang. Questions? Let's go to the vote. That carries 8-0. 8.7, Bill 17, Protect Ontario by Building Faster and Smarter Act 2025, as it relates to the DC Act 1997. Mover and seconder, Councillor Wang. Anybody? Councillor Beatty? Councillor Wang, go ahead.
Thank you. Through you, Chair, just a quick question on timing. When will we receive the actual submissions that staff want to make to this?
Director Weaver?
Through the chair at GIC yesterday, Acting GM Robichaud and GM Zagaric both provided an overview of the broader Bill 17 implications. This report addresses specific DC Act changes. There is currently a period of consultation open on that. Staff will be required to submit some draft comments by the deadline. That's escaping me right now, but it's before the next AFNA. June 11th. Staff is preparing a report with those comments for council and committee endorsement for the June 12th AFNA.
Okay, thank you.
Thank you. Councillor Clark?
Chair, I've not read Bill 17. Forgive me. Does the Act in any way, shape, or form prescribe a reduction in housing costs?
Who would like to take that? Lucky
Through the
Jim
chair,
Zagaric.
short answer is no. It does not address affordability. The argument that has been made is increasing supply should have a positive impact on affordability, but there is nothing to guarantee that these measures would address affordability in a positive way.
Councillor?
So here's my prediction. We will see DCs lowered. We will see exemptions for DCs. We will see community benefits lowered. all under the auspices that the developers will now be able to charge lower prices for the housing. But if they don't, that's just extra profit. So do we really think the cost of housing, new home development is going to go down? I don't think so. Let's see what happens.
Counselor, next time, make sure you read the act, okay, or the Bill 17. Counselor Wilson.
Thank you. My apologies, I'm not as prepared as I'd like to be.
So you didn't read it either, I guess.
I did.
Okay.
I read the appendix, and the appendix references DCs in relation to rental properties, I believe. Is that correct? And I was just wondering if this is in any relation. In 2026, municipalities will have the option to reduce the municipal property tax rate for eligible affordable rental housing units by up to 35%. Is that in any way affected by what I was reading in the Appendix A?
Through the chair, the councillor is referencing something the provincial government has proposed through their budget, not through Bill 17. And through the budget is the option for municipalities to adopt an alternative property class for rental properties. And again, we're still waiting to understand what the regulations of that proposed legislative change would be. But again, that was proposed through the provincial budget, not through Bill 17.
Thank you. Then may I ask on page 4 in Appendix A, page 4 of 7, the deferral of DCs for residential developments to occupancy. When would, I know this, I think Acting GM Robichaud told us yesterday it has not yet gone to standing committee. Is that true?
Through you, Mr. Chairman, yes, that is correct.
So we will not understand until this review and implementation is completed, what will the financial impact be? I'm trying to understand the work that is underway by direction given previously to review our DCs and this direction that is set out and how that will inform or perhaps delay the review that this committee put forward in April, I think April the 16th, through the chair.
Through the chair, that was one of the measures that staff identified through the preliminary amendments to our DC bylaw. While staff did not recommend proceeding with amending from payment of building permit to occupancy, if this change is legislated, municipalities will be required to do so. So staff are anticipating that requirement. We will have to develop agreements. We will have to develop processes in order to pivot and shift to that. And so staff, again, we're anticipating this change and have started to identify what procedures, processes, and what agreements have to be developed.
Through the chair, thank you. I guess I'm trying to understand what this may mean for the work that you are undertaking at present and whether that will elongate your work because the chessboard is changing and it may cause some of your calculations or considerations to be for naught. If we're mandated to do something, there's no point in us reviewing the possibility of something if in the end the prerogative is not this body's. It's been determined for us. So I'm just trying to understand the relationship between that previous direction of April and the timing of when you're able to come back. And I'm assuming that the timing will be elongated because we'll have to wait for that complete legislative exercise at the provincial level to be exhausted through the chair.
Through the chair, staff are continuing with that, with the process of reviewing our development charge bylaw as it relates to development charge exemptions and discounts, notwithstanding these proposed legislative changes. With respect to what was presented to committee as some preliminary options, this is the one option that, while staff were not supportive of, would have an impact in terms of the scope of work. We are still working towards, I believe, a June 12th date with respect to reporting back in terms of that body of work, the review of the DC bylaw, and still moving towards a July 2025 effective date. Whether this will prolong, I think that's something we'll continue to monitor. But again, we're assuming that we will continue to align to those dates that were conveyed through the report to committee.
Okay, thank you.
Thanks, Councillor. Councillor Clark? Or is there any other, hold on, Councillor, sorry, any other first-time speakers? No? Okay, go ahead, Councillor.
Thank you, Chair. So I'm a little bit concerned about the finances. So when you report back, will you be addressing the impacts on the city's financial situation? It looks like we're going to end up having a whole bunch of finance papers showing that, yeah, we're owed the money, but we won't get it until they get occupancy. And how do we hold that paper, and what's the impact going to be on our overall financial situation when it comes to Moody's and all those players?
Through the chair, I'll start and then I'll invite Acting Director Weaver, whose team has direct ownership over this body of work. The June report, I expect, will try to demonstrate what the financial impacts to the municipality will be based on the options. The one unknown will be the level of activity that any changes may spur or trigger from the development community. While we've engaged with the development community last week with both the residential and non-residential, it is not clear what may be unlocked if the city were to consider what is potentially legislatively required before you today, as well as some of those City of Hamilton DC bylaw amendments. What I'm trying to highlight is there may be ranges. We may try to provide a forecast in terms of what the impact is, but the impact will ultimately be subject to the level of development activity. And that is information that we don't have accurate information as to what that level of activity will be for the balance of this year and looking forward, for instance, to the next 24 months.
Thank you. And how does it affect growth management when we have developers, for example, they're responsible for the roads, the sidewalks, the pipes in the ground, and through that process, eventually they get paid for that work? We're going to have to pay for that work and not get any DCs back.
Yeah. So through the chair, it is a cash flow item. And as we've had these situations in the past where we've amended our capital plans because of downturns, I reflect 2008 and 9,
yes,
is we had to adjust our capital programs. And I believe that's a critical message for the community and the development community, as there seems to be some misinformation that if development doesn't occur, that there's a financial burden to existing taxpayers and ratepayers, but that's on the assumption that the city will continue to build out for that development. But what cities do is we adjust our capital programs to reflect what is actually occurring as it relates to development. So to Councillor Clark's question, We would report back through the 26, 27 capital program if there's an opportunity to pause or delay some growth-related projects because the development is not at the pace that it was forecast at in 2024, 25. It's through that process that we would present that updated information.
Okay, thank you. I look forward to the report.
I have no one else on the speakers list. No? Okay. I believe we are just voting to receive, clerk. I don't have a lot in front of me.
No, there are recommendations that if the province undertakes consultation as it relates to the proposed Development Charges Act changes, the General Manager of Finance and Corporate Services be authorized to make submissions on Bill 17 and any associated regulations, be directed to provide a copy of the submissions to Council for endorsement.
Thank you. Let's go to the vote. Vote is up. That carries 8-0. Moving on to 8.8, amendments to the outstanding business list. 8.8A, items requiring a new date. 8.8AA, feasibility of bringing your own device policy. Mover and seconder to approve the amendment to the OBL. Councillor Cretch, Councillor Wang, indicate your vote to receive the correspondence electronically, please. And the vote is up. That carries 8-0. Moving on to motions. 9.1, Ward 13 Community Grants. Councillor Alex Wilson, please introduce your motion.
Thank you. Happy to introduce my motion. Fishing for seconders. I don't know, maybe Councillor Clark wants this one as the Conservation Authority Chair. Okay, Councillor Clark is my seconder. So this is a continuation of our community grants program. This first motion is just for two more city-related entities. So it's just for reimbursing the library for costs that they did with installing a community garden back in 24. And really excited about the partnership with the Hamilton Conservation Authority to expand their water quality and habitat improvement program for the 2025 and 2026 intakes years. So essentially this is an existing program the Conservation Authority has. It partners with landowners to make improvements on their property, improving conditions in the watershed. There was a geographic concentration of interested applicants in the Ward 13 area, and it didn't look like, A, they missed the deadline, but also they weren't going to be able to get all their projects funded with what's available. Rather than trying to work out agreements with those landowners, it's much easier to just support an existing program and have a bigger impact. And so the Conservation Authority is going to be doing a second intake for this program targeted around the Valens Conservation Area to meet the need and desire in the community. And it's an existing program they run, just offering a second offering for some Ward 13 residents who wanted to take on those projects.
Thank you, Councillor. Don't have anybody on the speakers list. We'll go to the vote. Vote is up. That carries 8-0. Moving on to 9.2, Ward 13 Community Grants, Q1, Q2, 2025. Councillor Alex Wilson, introduce your motion, please.
Thank you. I think I can count right. These are another 9 community grants, about $22,000 collectively for community organizations in Ward 13 who've applied through the process, submitted an application with what they're intending to do. That application was reviewed by our team. These are the outcomes of those reviews. Broadly speaking, funding things like biodiversity and community gardens popping up, beautification in public spaces, youth athletics and youth arts programming continues to be a substantive need in the community, and new programs have been set up through this grants process, including continuation of the DVSA's kind of specific partnership on a youth art exhibit. So that's a community youth exhibit, all youth artists in the community. And as well, there's funding for senior support organizations and for combating social isolation in the ward from community groups who are doing that work. The details are in the motion that's on the agenda, and my seconder Looking at Councillor Wang.
Thank you, Councillor. I have no one on my speakers list. Oh, we do. Hold on. Councillor Tattison, go
Just
ahead.
one question to a good counselor. Can you tell me what Action 13 is and who they are?
Yes, I can. A collection of residents in the Ward 13 West End area. So for context, Environment Hamilton put out a call to action several years ago to say, hey, set up community climate hubs. Myself and someone else did that work. I haven't been involved in the organization since 2022 when the election happened, but it's a collection of neighbors in Ward 13. The Eco Art project right now is a goal of, again, that community installation, bringing together local folks in kind of designing what that is, enhancing a public space, doing that beautification, a bit of a education piece, but it's organization of neighbors. They do have a bank account and meet some of the organizational requirements as opposed to just being, 3 folks coming together. They are more of an organization.
Thank you. No more questions.
Thank you. Let's go to the vote. That carries 8-0. Thank you, members. Thank you, staff. We are adjourned at 12:04 p.m. Have a great day.